Good morning, traders. It is 8:02 a.m. Chicago time on the first day of February, Monday, February 1st, 2016, 8:02 a.m. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A fair amount of news, but let's first look at the sentiment overnight. Oil is down around 350 basis points, gold up 50 basis points, U.S. Treasuries flat, Eurozone Treasuries flat. The Asian markets showed the Nikkei up 1.98%, the Hang Seng down 0.44%. The Shanghai index is down 1.78%, and the Japanese yen is up 11 basis points. Eurozone equities, the FTSE's down 128 basis points, CAC 40 down 129 basis points, and the DAX down 117 basis points. U.S. equities down 61 basis points, and the dollar index is down 35 basis points. So overall, we have a strong Japanese market, a weak Chinese market, fairly weak commodities. The market is lifting gold. So the conclusion as of right now is the overall sentiment in the overnight session is a flight to safety is prevailing. Money's moving to the sidelines slightly in most major markets. As far as news and what's driving this type of action, China's official manufacturing PMI index fell to 49.4 in January from 49.7 in December. Holding below 50 is considered a contraction, and this has been the sixth straight month of contraction. Additionally, the National Bureau of Statistics non-manufacturing gauge slipped to 53.4 from the previous 54.4 in China. That's where the bad news comes from. Even worse, South Korean exports tumbled 18.5% year on year in January, posting their biggest drop since mid-2009. This is troubling news for the global economy as economists look at South Korean exports as the world's imports. Shipments to China from South Korea, South Korea's largest trade partner, fell 21.5% year on year. Another indicator is the Macau gaming revenue tumbled 21.4% year on year. Macau is basically the Monaco of the Asian area. It's where a lot of money goes, discretionary money goes to play. And the revenue has tumbled 21.4% year on year in January, making for the 20th straight month of decline. So you can see that people are starting to pull on their purse strings and cut back on their extra spending. Barclays and Credit Suisse settle a dark pool investigation by the SEC for a total of $154.3 million. No, that's not billion, it's million. $154.3 million. SEC director says these largest ever penalties imposed in SEC cases involving two of the largest ATSs show that firms pay a steep price when they mislead subscribers, which is kind of interesting because I feel like when you are breaking the law as a Barclays or a Credit Suisse, 154.3 is a pretty good settlement. It's a drop in the bucket as far as I'm concerned. It's not really a penalty. OPEC official says it's too early to talk about emergency meeting. An emergency meeting, I guess they have not. They don't feel the pain yet. And just now at 7:30 Central. Half hour ago, we got December personal income in the U.S. at 0.3 versus 0.2. PCE core month on month came in worse at 0% versus 0.1. A year over year in line with 1.4%. And the December PCE deflator month on month came in at negative 0.1% versus 0. Expected year on year 0.6 in line. Given that it's Monday, I'm going to do a quick scan of the week. Tomorrow, German unemployment, UK construction PMI, European unemployment and PPI, and we have Fed's George. Wednesday, we have European, German, and UK services PMI, European retail sales, U.S. ADP services, and ISM. Thursday, we have German construction PMI, UK Bank of England rate decision, US factory orders, and ECB's economic bulletin. And then Friday, we have German factory orders, and then the big one, US non-farm payrolls and unemployment, trade balance, and consumer credit. Friday's a big day this week. Pay attention as the week winds up for that day. Let's switch gears and look at what we did on Friday. On Friday, I'm going to first show you an image here. This is from Friday's Trader Bite. Just a few seconds before, this is about 14 minutes in, just a little bit before I outlined what I expected for the primary hypothesis. I was looking for it to drop. Oops. For it to drop and come into the point of control and chop around before potentially basing and starting to move up. Remember, I said the overall sentiment is to the upside. However, on the secondary hypothesis, which I describe next, this is what I drew. A pullback down to 1891. The expectation was around 1891.92. A quick base. And then the expectation is we would get that all infamous at this point 1915 MCVPOC, former MCVPOC, with the 1923 being the outside target. And I'll show you where that came from. So this was Friday's hypothesis. Hypothesis number 2 worked out almost exactly. We didn't push down as much as I had expected. There was a lot more strength in the market on Friday than I had anticipated, but we still had a hypothesis that pretty much played out as expected. So you can see here we opened and there wasn't much. I expected it to push down to this low volume node and high value high area before bouncing up, and it just could not muster up any sellers. And once it pushed up, it could not retest this mid. Very difficult for me to get on these because I don't take breakouts. It did not pull back far enough for me to jump on early on, so you kind of have to sit on your hands or find something else to do. This was the first opportunity right here to jump on in the direction. At this point, it got to 1911.50. We still had room to 1915, and that's what I was gunning for here. 1915. Recall, been talking about it for 2 weeks, and there's 1914, 1915 taken, done later in the session. Took a while from this mid pullback to the point where it got to the target here. At least for me, it took over 2 hours just sitting there, and then it just carried on. The trend turned out to be a pretty strong one. It became a trend day profile, and we finished the day on the upper quartile of the day. Point of control pushed to the top of the day at 1930.50, and we have a week high. We have the point of control at the top of the day. We have a trend day. So the expectation was for a higher high overnight, and the market disappointed. The market got a higher high, an overnight high of 1932.50, missing the high we left behind on Friday by 2 ticks. In my opinion, if this had been any day but Friday, this would have been we would have seen a higher high on the overnight session. We're currently trading 1915. We just came off of 1918. We just came off of 1915. No surprise there. But the thing to take away from this action overall is if we look at the overall composite. So I included Friday's action. This is Friday's action right here, this bar. Let me thicken this up a little bit so we can see the bars a little bit better. Here we go. Nice thick bars. The cutoff, as I said, is right here. This it turns out to be also the value high of this balance zone, but the LVN here is 1923.50. And remember, our key target was 1915 quarter. That little peak there carried over from August, September, October. The current point of control is below, as we had talked about last week. It's at 1890. That's the area we expected to pull back to before the run up. We couldn't do that. The low that day was let's see, the low that day was 1893 and a quarter. So it just didn't have much power, as I said, to push down. So this is a pretty strong move up despite the overnight news that's pushed us down um, into the low that we have now. But overall, if as long as we stay below this 1923, and that's the conclusion we have to draw from this, as long as we stay below the 1923 this morning, then the expectation is for it to take out this overnight low at 1913.75 and continue to push into the LVM below at 1911 this morning. So that's what I'm looking out for. What happened to my Not sure what happened to my profile here. Let's put it back on. There we go. So here, 1911. This is the low I'm expecting this morning. If it pushes through the 1911 low, again, as long as it stays below 1923 right here, which is also an LVN from Friday, as long as it stays below it, and it is below it now, the expectation is for it to push to 1911.50 and back down into the high volume node it left behind on Friday. Remember, 1903 below us is a pretty decent floor. From several days of trading. We've had 1902 and a quarter is a high, and 1903 is a weekly low volume node. So my overall primary hypothesis is for the market to chop on the open, fight it both ways, opening in range. There's no real value here. You can see the value area, the gray area is very wide. There's no such thing as value, even though the computer computes it mathematically and puts it on the chart. You have to step back from the lines that are auto-generated or the levels that are auto-generated and ask yourself, is this legit? And so the system is going to put up a value area, but there's really no value area here. That's the definition of a trend, is a market seeking value. And trend days tend to continue until we find balance. Then we establish value. So when the market is moving up and trending up, there is no such thing as value. So it's opening in range, not in value, even though it is technically, according to the chart, it's in value. In any case, the expectation is for it to chop around, opening in this high volume node, and the expectation is for it to push this overnight low, 1913, down to 1911. I expect a small bounce on the first try, and then I expect it to push lower into the 1908, 1905 area and find a base there. I don't think the news is so bad that we're likely to push this low and start moving back down into the 1890. I believe that looking at the chart, chances are we'll push through and then we'll find ourselves chopping around in the 1915 area. Why chop in the 1915 area? As those of you who have been following for, how long has it been? 6-7 years since I've come online. That is our MC point of control. We're likely to transition the point of control back up to that area. So the expectation is that we chop around this area long enough that eventually what will likely happen is the point of control is moved down to 1819 from 1915 up here, and then it's likely to shift back up and go to 1915 again. We'll likely continue to draw in energy, and then we'll likely have our continuation higher as the market continues to seek its sellers. If you recall, when this 65.5 point rally happened on Wednesday, I did warn that this was a major reversal day here. I did warn the shorts. I suggested those who are short should either lighten up or look at call options or something, putting on a spread or something to mitigate the loss. I hope you've done so. We have pushed through by about 126 points since that low we put in earlier this month. This is a pretty decent move for 1 month for the S&P. The trade is still fairly volatile, with ranges still pushing the second, almost the second standard deviation of range. So you have your primary hypothesis. The secondary hypothesis is it attempts to go down, is unable to get through the point of control. If we look at the overnight, profile, we shifted the point of control from up here to down here just a few moments ago, just before the open. That's another reason for the expectation of a lower low here. But if it attempts to push lower and starts to base and starts moving up, then the target becomes the point of control above at 1930. That becomes the key area to watch. That's about 10 points away, and that becomes hypo 2. However, hypo 1 has a relatively significant probability of working out. Anyway, I'm over my time by a couple minutes. Hopefully you've gained something from the session again. Just keep an eye on the market. Stay with the story. Stay current with the story. And keep in mind that there is a process that's taking place. Regardless of what you use, whether it's fibs, averages, whatever, there is a reason for the market to uptick and downtick, and there's an auction in process. So understanding the auction, which is the purpose of this Trader Bite every morning, understanding the auction helps you take a much stronger hand so that when you start raising your size to 10, 20, 30, 100 lots, it's based on something that is more sound than an indicator that has crossed or whatever. I'm not poo-pooing that. I'm just saying that whatever you build, whatever you use as an indication of when to get long or short, when that's built on understanding what the auction is doing, your hand is much, much stronger. And that's the reason I created those webinars on my website. Good luck, and I'll catch you tomorrow. Take care.